Well, there were no real surprises in the recommendations arising out of the live exports review, despite some very concerted lobbying by those opposed to the trade. Perhaps the key element is the time frame. Tracking and supply chain regimes have to be in place by the end of next year, and exporters say this should not be a problem. The review's author, Australia's former Indonesian ambassador Bill Farmer, believes the new measures will give the trade a sustainable future.
Under the old arrangements, we could not have assurance about animal welfare. Under the new arrangements, the aim is that no contracts will be let until the government does have an assurance, an audited, verifiable assurance of animal welfare, and that too will be subject to an assessment after a year of operation of the new arrangement. So it really is a profoundly significant difference.
That's Live Exports Review author Bill Farmer. Still with beef, and it's fair to say it's been a tough year for Meat and Livestock Australia. And heading into the AGM at Longreach next month, it's not getting any easier. Once again, MLA will face a challenge from the Australian Beef Association on how the industry is run. In fact, the ABA wants the MLA wound up and replaced. The ABA chair is Brad Bellinger, and my first question to him, how has MLA failed?
Well, the MLA since inception, Kerry, has failed to deliver better returns and outcomes for cattle producers who are the main funders of the organisation.
Now, Brad Bellinger, Australia turns off 6 to 8 million cattle a year. How can MLA be responsible for what producers and processors want to pay for those cattle?
Well, isn't that what the MLA is all about with their marketing? I mean, this year they're putting $60 million into building demand, so that demand should flow through to higher cattle prices. And the best way to really benchmark the MLA is to look at cattle prices throughout the world. Now, Australia currently has the second lowest cattle prices in the developed world. If you look at more specifics, we're sitting on about $1.90, $1.95 a kilogram for feeder steers. In the USA, they're about $3 a kilogram Australian for feeder steers. If you look at live weight, we're getting about $3.60 a kilogram. Brazil is on $4 a kilogram Australian for their cattle. So we're getting some of the lowest prices in the world. Now, since 2000, the price of cattle in Australia has basically flatlined. There's been ups and downs, but it's basically remained the same. Now, beef at retail has increased by 50%. So all the money which MLA is putting into meat marketing is being captured by the large processors or the large supermarket chains.
So at your view, MLA has failed. How would ABA be any different?
Okay, well, we're putting forward a resolution, as you know, to wind up the MLA before December 2012. So what we're proposing to do is to put in, if we're successful with this resolution, of course, is to put in an alternate structure. So that alternate structure would be splitting the MLA, the old MLA, up into two parts. You'd have a research and development corporation. So all the R&D money which the government puts in the MLA would be put into a separate lean five-member board, for example. And then the new MLA, called, say, the Australian Meat Board, would just focus on three main aspects. The first one would be trade negotiation, which of course is essential to open up overseas markets and lower tariffs. They would look at putting through a grading system, which is vital to lift consumption domestically. And the third aspect, which the MLA can perform, is to give us an overall market reporting service. So producers know what the price they expect to receive the cattle and can report it and do all those statistical analysis.
So that's 1,000 of your members versus plus 40,000. Do you have any realistic chance of success?
Well, many would say we haven't. We put forward this motion in Launceston last year. We only obtained 15% of the vote. For such a radical motion, we were quite happy with that. The criticism we had last year was that the ABA didn't have an alternative structure up. This year we have got an alternative structure up. There are a lot of discontent within the industry about the performance of MLA, which I can go into later on with the live cattle trade, etc. But if you look at the structure of the voting with the MLA, Kerry, 40 of the top levy payers control 50% of the vote. Now, we have to get those big voters on board in order for us to be successful with this motion. And statistically, you said that the MLA has 47,000 members. Well, at the last two AGMs in Launceston and Darwin, there was only 10,000 of those members which got their full voting entitlements. Only 5,000 of those actually exercise those full voting entitlements. So there's around about 200,000 different entities in Australia which pay a levy. So it only represents about 2.5% of the people who potentially could vote are actually participating in the AGM. So they're the figures we're up against.
Brad Bellinger, Chair of ABA, we'll see you in Longreach. Thanks for your time today.
Thank you very much, Kerry.
Now that's the politics. Let's look now at what really matters, the prices, and last week numbers were up. No surprise as the warmer weather emerges. Sale yard comment is that cattle on offer are generally in excellent condition. So the indicators fell slightly. Exporters appear to be a little happier these days, but having to deal with the currency roller coaster must present some challenging moments. The Eastern Young Cattle Indicator retreated a fraction to close at $3.97. Solid demand is keeping lamb prices up. Once again, the good season is delivering top quality, and it took a big lift in numbers last week to take the edge off the indicator. That price, $5.06 a kilo carcass weight, is 28 cents up on the price this week last year, and the mutton price is 54 cents above the level of 2010. Let's check grains now, and markets appear to be playing the wait-and-see game, and future directions will depend on the fix in Europe or the non-fix. Drought in America is also part of the equation, as is the price of oil. As odd as it might seem, all these extraneous factors influence the price of our food and fibre. Soybeans dumped 32 cents, wheat and corn corrected a fraction from last week's fall, plus some negative planting news from the Ukraine and confirmation from Saudi Arabia that it will no longer grow wheat from 2016 so the country can save water. Local futures continue to soften in line with seasonal conditions. WA wheat for January eased just a little, while East Coast milling wheat slid a further $10 plus, and I've put up the futures for this time last year. Both prices from 2010 were way up compared to current offerings. Local spot prices are also in the waiting game. Wheat kicked a fraction while canola is falling in line with Canadian prices and sorghum is steady. Market chatter has a heap of sorghum available. Cotton traders in New York are expecting some support at current prices, while one of the many keys to the sugar market, the latest influence being the crop in China, has led to sugar staying relatively firm. Cotton at below 100 cents is unusual, while another poor season in China, alongside rising domestic consumption, appears to be putting a flaw into sugar. And finally to wool, where buyers chased the good wool offered in Newcastle, but the overall indicator fell a fraction. It's inevitable wool traders would also be waiting for the euro fix. So the indicator closed the week at 1,158 cents. The market started slow but finished with some energy. And it's worth noting that although the EMI has slipped nearly 15% since the start of the season, it's actually up nearly 25% on this week last year. And that's the Landline check on prices.